and this will be a 60-minute chart. And for those that are new, I'll explain everything as I go through. You get to see some of the stuff I look at. And this will be 4 hours. And this will be daily. And this is going to be weekly chart. Okay. So let's get to some of the charts. Let me just fix my oscillators, the MACD, as you may call it. All right. I'll go through some charts this morning. Basically, my job is not to sit and give you trade setups if they're not there, but to give you some guidance, make sure we're all on the same page and you're looking at the same direction. Okay. Okay, so what we have here on the top left, and you'll notice I have eight charts. Oh, and by the way, let me show you all something important. That's important. Starbucks matcha. That's important. Okay. Okay. So what we have here is 15-minute chart. And let me show you the components of it, how I have it set up. I'm using candles because, quite honestly, they're easier for me to see. And I use red, white, and blue. And I did this on September 11th, 2001. I used to use a whole different color background. I used to use green and white and this and that. And on September 11th, 2001, I changed it to red, white, and blue so you can see the whole screen. But I use candles because it's easier for me to see. The thicker bars, you can see the up and down. I don't have to chase the little price bars around. And right here, you have the MACD. This is a 310 oscillator, what we call a 310 oscillator. And let me show you this. So you may want to take a screenshot. Okay, you set your MACD up. It looks just like that. Okay, take a screenshot there. Give me another couple seconds. Fantastic. And then that's how I have the MACD style. Okay, so you have everything that I have. Now, if you missed anything that I just put here, after this is over, there'll be a recording, so that way you can go back and you can watch the recording and just update your situation. This right here is the 20-period exponential moving average. Okay, right there. Sorry about that. Input, 20-period, close, EMA, style, whatever color you want. And that's how I have my chart set up. So I have a 15-minute chart, a 30-minute chart, an hourly chart, a 2-hour chart, a 4-hour chart, a daily chart, and a weekly chart. And we're looking at the EUR USD. Last week we looked at this chart and we said that the market is still in this wave down, and we still feel that the potential to go lower is greater than going higher for now. It's in a downtrending environment, and I'm still under the impression that this market could come down right to the middle of this prior range here. So if we look at this prior range, man, I hurt myself where it's a little bit difficult, like using my hand and my leg and stuff, and just getting back, but it feels weird, moving the mouse around. But that's okay. I'm getting back better and better every day. And you can see here the market is still testing this area that we looked at last weekend, these lows. I'm feeling that if this area starts to break, we can make it back down to the middle. So you have a whole lot of downside to possibly to come. And I talked about this yesterday in a webinar. Let me just check my program and see if you have any updates for me real quick before I actually get started. Okay, good. We looked at yesterday that when the market's choppy like this, you just want to be patient, all right? You don't want to have to jump on it. I would prefer to let this market break down or break up at this point and not do anything. I would rather see something like this. See how this is consolidating and then the market breaks? I would like to see the same process here. Consolidation and then break. And then you start looking at entries on a smaller time frame. Here, you can see the market middle zone here is the best area to target to the downside. Should the market hold and show a nice reversal, then we'll have a nice double bottom in here. But for now, I don't see too much going on with the EUR USD that I really want to put any risk on. Doesn't give me any feeling either way about doing anything on a risky side. So let's put that aside. We're just going to go through the charts, and when we finish, we finish. Okay. Okay, Australian dollar. Now, I can't see or hear any of you guys because I'm doing this, I'm broadcasting, so I'm not receiving data, so I'm just broadcasting. So if you are asking questions or anything, I cannot see it. Let's take a look. Actually, I like this chart here. Okay, right there. Let's take a look at this daily chart. All right, we'll just move this down a little bit. Okay. Here's what we got. The daily chart of the AUD USD, you can see the market jumped up and has been in this consolidation mode. Quite honestly, it looks more of the type that wants to um, pop up rather than do nothing. So let me show you what I'm looking at. So it looks like a little bit of a pull and then a consolidation. So to me, this is feeling as if the market wants to hold this area and start to turn up. Okay, we can see down here, we got all these like little tests down here. Market failed, came back up, held it, and is put a higher low in. So looking at the lower time frames, let's look at some lower time frames to see what they can offer us. Let me get a 4-hour chart. Okay, let's get a 4-hour chart. Okay, and this is perfect. You can see this market consolidating. So I would give you a level to watch. I would not touch the downside, but I would touch the market on a break above this last little swing high here. So depending on what broker you have, put a 4-hour chart up. You can see the last little swing highs. Okay, it shows some resistance, and a break above that is a buying opportunity. The only reason I'm saying that is because daily charts, as I just shown you, the higher time frames, the weeklies, are holding the major lows. So I want to go in the opposite direction. And this is fine right here. The market made it to an area, and it looks like this whole area is holding down here also. I'm not a fan of selling. I'm just not. Although there may be opportunity to the downside, I think the bigger opportunity would be if it comes out of the upside. Okay, so AUD USD. I'm drinking some matcha iced tea from Frappuccino from Starbucks. Okay, so right here I have the sideways type of line. This coil market keeps holding these lows. I'm more of a fan on a breakout of the upside. I would not touch it until that happens. So you have plenty of time to sit and wait and watch it and keep an eye on that. Okay, AUD USD. You got to be real careful when markets in these consolidating type of modes. You got to be real careful not to just get in there and get caught up in the rhetoric and in the mess. I'd rather see a breakout to the upside, a normal type of consolidation, where the market breaks in a direction, gets a nice pullback. That's fine. I would rather wait for that. So no rush on the AUD USD, but at least it's something you want to keep an eye on. GBP USD. And I'll try to get you through the charts as timely as possible so you guys can start your day and get things in your life going. Okay. We looked at this last week. This market's feeling like it wants to, it's retraced up. It's feeling like it's trying to turn down. So let's take a peek here. What's this? I hear sirens on the Vegas Strip. Woo! Okay. All right, but in fact, this market's trying to hold again down here. Okay. See, every time you change the picture, get a new picture. Okay. Here it looks like we have one test, two tests, and the third test is holding. I would not be against. I would not be against trading the buy side with the stop loss under here for a small trade. Let's see how far it would want to come up. I like the fact how this held down here. So any pushes down tonight when they open, any area here you could trade from the buy side only for the fact that you had 1, 2, 3 areas that the market held, and it looks like it's trying to push up a little bit. I like that. I'm good with that. Also, we have like a nice little descending trend line here. You can see that right there. See that, guys? So kind of, let me just draw this picture here. You can see it. It's a coil type of pattern going on. Nothing wrong with trying to trade from down here. Nothing wrong at all. You know, many times I've taken trades where they've hit that lower trend line and you think it's going to break and it shoots up the other side. And that's what the market's all about, taking some risk, right? So here is an area where I feel comfortable taking risk, thinking that it spiked off the last low. Why not turn back up? Look, if you get into trade and it can come back up to here, you put a break even stop and see if it can run. You know, worst case scenario, you put a little risk on the table. If you lose some money, that's just part of the game, you know. But if the market does turn, you can have yourself a long move to the upside, and I'm willing to take that risk on an account. So that's fine. All right. Let's see what else. That's GBP USD. AUD. No, we looked. No, we looked at that already. Hold on a second. CAD. We'll look at some of these other markets also. Oops. Sorry about that. Okay. Okay. AUD US, CAD USD. Okay. Not seeing much here. Not seeing much here whatsoever. I wouldn't touch this market. It's not telling me much. Let's take a look at USD JPY. Okay, I was looking here for a retracement down, another possible pullback to enter into the buy side last week. If you recall, we were looking at this for a possible pullback for a higher move. The market made a higher move regardless, but didn't give us that pullback down. Sometimes you just don't get what you want, right? So we can see the USD JPY market made a shift to the downside, and then you had the corrective wave up, or an impulsive wave up, a 5 wave, and then you had the corrective wave down. Market held and has been trying back up again. We're looking at possibly a move to the middle of that prior range on the USD JPY. And last week we were looking for, if the market opened in any pullback down, we were looking at the buy side. Unfortunately, just it's on its way back up right now. So let's see what else we can gather from this wonderful chart. Okay, let's go down to the 2-hour chart. Okay, so as you see, we've been in a trend mode up on the 2-hour chart. You can see this. What you do see here is this line. Okay, you see this right there. Okay, that would give us a possible entry on a pullback of that length. So what I would do here is take this. Okay, I would clone it. Sorry, man, I hurt my hand, so it's a little bit Not as easy to move as it normally is, but it's getting better. And that would give us an A to B, C to D. So if we look here, this would be an A to B, C to D. And this is what they call an OR, AWE, alternate wave equality. Okay? Alternate wave equality. You can see that right here. Okay, that's an AWE. That's what they call a one-to-one or an alternate wave equality. The market has made its way up on a trend mode up, and although the higher time frame still can go further to the upside, as we were discussing on that higher wave, like right here, we still feel the market can go higher. Well, you got to expect naturally a pullback, right? So should the market pull back again, this is what we would be looking for. So I would look first at the A, B, C to D. I would also look at uh, a wave retracement in there. Okay, who's calling me? Hold on a second. Hold on a second. It's funny, people messaging me. Hold. I'm doing the market mastery class. I'll call you after I finish, okay? That's one of our executives that don't realize that I'm doing this. And that's what we talk about communication at the highest level, right? Where you tell them, hey, look, I'm doing a class, don't bother me. And then they call you at the same time. So that's what we call communication at the highest level. How would Jim Rohn put it? That's what we call communication at the highest level. The storyteller says you should communicate. All right, whatever, Jim Rohn. So if we look here, we get a 38% plus or minus retracement anywhere into the zone. I would like to see that as a buy opportunity. So right here, okay, for those that are looking at trading the USD JPY, and they pull back down towards the 38% retracement, that would be ideal, right into this area. And you see why. So what I would look at also, and I'll share how I map stuff out real quick, is the reason why you have a wave up, right? So you have 0, 1, 2, 3, 4, and then you look for another wave up. Okay, and that wave up would push towards the area that we were looking at. So I would not buy the market up here. I'd wait for it to retrace the USD JPY. Very, very good area. Now, again, look, I'm laying this stuff out for you. Doesn't mean it's going to happen. No. If it happens, it happens. If it doesn't, at least you have a roadmap or a game plan that if the market does hit those areas, okay? And again, that right here on the top right is the same as that lower left, and that's this move up. So in this move up, I'm looking for a little retracement so to push this market even higher. Okay. What else are we looking at? What else are we looking at? Okay. What I want to look at is look at some gold. XAU USD. Look at a CFD gold. I'll look at the gold market. Okay, we looked at this last week. Okay. Okay, we looked at this last week. We basically said if the market can get down here, we like the buy side. So still on the daily chart, it's still testing the area. Let's see. Let's see if this wants to come down. Um, it's consolidating. It doesn't say it's put a bottom in. I know it's spiked up a little bit, but nothing's really telling me that this is a buy just yet. I don't want to buy it here for the fact it's still turned down. I'd rather let the market come to us and push down to the zone. So the XAU USD, the gold market, I sit and just wait, be patient. Now, if the market does turn up from here, if it does over the next couple of days, right, then we will look for another area to buy. But for now, this is not giving us any indication that this market right here has a bottom in place whatsoever. Let's take a look at the smaller time frames. You can see the smaller time frames are not really telling us too much. They're testing and holding, but that could be news. It could be anything. You know, it could be. It's just noise. So I'm still going to sit with the bias that if the market does push into these lower areas, you'd have a good retracement plus an A to B, C to D move down. So UTI, WTI, U.S. Oil. Okay, looking at the oil markets. Now that's exciting right there. That's an exciting market. Okay, we see here that this market is in an obvious move up, and basically, I think we talked about it last week. You just have to wait for some type of retracement. This thing is just beast mode up. Nothing you can do right now. Obviously, up here is an attraction point up here, but you're gonna have to see multiple days down before you do anything on this side, any kind of time frame. If you look here, you have these daily charts where they correct a few days, so you're just gonna have to wait. Um, there are some brokers that actually allow you to trade the oils. I like the oils. They excite me. I think it's a very, very good market. You can make very, very good money with it. They have long extended moves, as you can see. They're very orderly. The oil market is a very, very good market to trade, and I would consider looking at that. But under these conditions, you can't do anything, right? You just have to wait a few days. So if we can get a pullback over the next week or so, then we'll mention it. Now on the upside, right? All right, because remember, we came from up here down to here, and now we're correcting back up. All right, you hit a 618 retracement. Ah, that doesn't mean it's a sell. I'm sorry. This market is in a very, very strong, powerful move up on a daily chart. So I would need to see the market come up here. All right, I would need to see the market come to 786 to 886 retracement area on that bigger move before we even consider selling. I would not do it anywhere here just because it hit a 618 means nothing. I know people think, oh, Fibonacci level. No, this market is in steady move up, and if it does retrace, then we would put some fibs the other way from here to here and down. But for now, let's just keep an eye, and you have a lot of time before it gets up to this area. This is the area where it would be an ideal sell point. Okay, let's look at the ES. These are the futures markets. I've been trading them for many, many, many years, and trade them on an intraday basis. 1 minute short, 5 minute short, and for now, this market is in an extraordinary move back to the upside. It sold off, as you can see, about a couple months ago, went to bear market territory, and had a bounce back all the way up. Now, if you don't think somebody's manipulating this market, then something's wrong, right? That market's definitely that's not normal. So, but ours is not to ask why. Ours is just to sell or buy. So for now, the U.S. Stock market looks like it wants to retest the prior high, or quite honestly, it could fall short. So this is a key area where everybody's watching that market high up here. Everybody who is a trader, that's the area that's going to be watched now. The market all-time high. That's where everybody's watching. They're not going to look at anything else. And the bigger money is going to try to drive the market up to that area. And the little money, I know what they're going to do. They're going to try to sell this all the way up. All right. So for now, we'll just sit, watch. This is a good scalping market. If you trade them on a 1 minute chart, well, that's not the 1 minute chart. Yeah. On a 1 minute chart time frame, they're very, very good, very, very good to trade on an intraday basis. This is let me show you. Let me slide this over. There we go. Very, very good market to trade on an intraday basis. very fun market to trade. I've done very, very well over the years, and nothing wrong. I know there's some brokers, I can't say brokers' names, because God forbid I say brokers' names, then I got, CFTC and the whole world up my butt. So other than saying names, you find them yourself. But I use the futures markets, but there are some Forex brokers that offer what they call CFDs, contracts for difference. And that allows you to trade these things. Okay. Bitcoin. Let's take a look at Bitcoin, and that represents the cryptocurrency market, and then we'll call it a day. BTC USD. Okay. Oh, here it goes. Cryptocurrency. Hello. I use Coinbase. All right. Now, we looked at this last week. If you guys recall, we looked at this last week that we liked the market above the 4,600 level, right there, 4,600 level. We saw that they were coming to an equilibrium point on our last mastery call last Sunday. We discussed that a break above this purple line would indicate a much larger move to the upside. So that's what's happening right now. Where I would be looking at is right here, back to that prior equilibrium point. You're talking upwards of 6,800. So the market still has the potential of another 1,000 points easy to the upside. You had a breakout here, as you can see on the reverse side. Okay. All right. Those that took the risk to the downside are now enjoying the reward to the upside. I had talked about this yesterday, and I'll talk about it again, and I talked about it last time, and I'll talk about it forever. The financial markets are the only place where you can get a discount and people will run away. If you're the stores, the big expensive stores, the Bloomingdale's, the Saks, the Neiman Marcus's, the Lord & Taylor's, the big stores, if they're giving you a 70% discount on clothing, on all the hottest clothing, let me tell you something. It's freaking that Friday, that Black Friday sale. Everybody's rushing to the stores. They got to get their free discounts. But when the stock market or the financial markets are offering you a discount, market went to 20,000, was down at 30-something hundred. It's offering you discounts. Everybody's running away. Oh, it's going to go lower. That's when the professionals come in. That's when the big bosses come in. The big traders come in and they take over. And right here is a clear example. Okay, clear example. The market went down and you can see sideways, 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 bang. Okay, now this broke. And I know a lot of people right up in this area were watching and waiting for a move up. Matter of fact, iMarkets Live, myself, I was looking to release a product back in, I think it was November, right? Yeah. We were looking to release a product. I think it was November 8th. We were looking at mining at the time, remember? And then we set it for the 18th. But the market broke so hard, we decided to stay away from mining because now the profitability went too low and we ended up leaving it alone altogether. We just found it was going to be a difficult opportunity, which was, we got lucky, quite honestly. I think it was smart on our leadership part, but the market, God forbid, if we would have joined here earlier, it would have been fun. But the fact is we didn't enter into that market. We stayed away from it. But the market broke to the downside, and that right there, everybody here was waiting for a move up. It was all over television. This right here made, what's that, once something, twice shy, or something like that. Anyway, people got scared because it's happening again, and now you got people predicting Bitcoin 2000, Bitcoin 1000. They're still predicting a crash. The fact is the market went sideways for months. All right, it went sideways from November until March, right? So let me see, what is that? November, December, January, February, March, 4 months went dead. Everybody walked away. So picture you out in the woods, right? And a bear comes out. Now I would run, and I can't really run. I'd probably run like 4 steps, right? But the average person would just take off and run. But they say you gotta lie down for the bear. lie down, play dead, right? Bear comes over and walks away. That's what happened, okay? The market went dead, and all the little traders are looking at it going, it's a dead market. Don't pay attention to it. Bitcoin's going to die. It's going to crash. And all the bigger traders, all the institutions have been accumulating. All right. Myself, publicly, I've been accumulating. I talk about it all the time. But is right here a systematic $100 million worth of Bitcoin was bought at a particular area right here. And that instigated a lot of other people to start putting money into Bitcoin again. That attraction, right? Big person jumps in, and now it's followed the leader. So what you have here is a market now that's consolidating. It's not pulling back, as we've seen in the past. Market runs up and crashes. It's holding. And my feeling is this thing is going to run. I think 6,800, 7,000 is the next area to watch for Bitcoin. 6,500, I'm sorry, 6,500 to 7,000 would be the next area. So I would highlight this big area just like this. I'd come across, and this is the area to watch, okay? Right up in that zone. Right up in here. So you're roughly 6,500 up in that zone. I think that'll be the next area. Now, when it gets, as it's moving higher, what's going to happen? People, the smaller guys, the guys at 50 bucks, 500 bucks, 5,000, 50,000 are going to turn around and say, Bitcoin's alive again. And that's when the masses start putting their money into the markets. The smart money was accumulating down here. The smart money, the big institutions, okay? The bigger players with a lot of money that can sustain bigger moves down, they've been accumulating. And all of a sudden, bang, they're in now, they're up, and the smaller traders looking at this saying, well, should I get in here? Maybe to go back, and trust me, as the big money, they're going to push it higher. The smaller money is going to say, now's the time to buy. So here's what I suggest. Look at this market in here. If you didn't get in down here, if you didn't get in on the break, so you got risk down to 4,300, right? Should the market pull back further, look at the buy side. If it consolidates further, maybe put some money at risk. Big deal, all right? You're not going to be successful unless you take a risk in life, okay? In anything, all right? Nothing's going to come right to you and hand you money, right? Nobody's just going to show up and say, hey, look, here's money. I know, except my market mastery classes. But bottom line is, nobody's just going to hand you money. The markets don't make it easy for you to get in. The market's job is to take money out of your pocket, confuse you, and cause you financial disaster. That's the market's job. You have the smart money and the dumb money. Just call it what it is. The smart money is the big money, the institutions, right? We're not that smart. These guys are multi-billion-dollar institutions. I had a friend that just had an interview with a company in Boston, Cambridge something, $30 billion hedge fund. 30 billion. So they're much smarter than we are, obviously, right? Because I don't have anywhere near 30 billion, or even 3 billion. All right. So, or even a billion. All right. So, like, we're like the stupid money. All right. The big smart money, they have all the algorithms, they have all the geniuses work from, they know when. And when they move, we move. So now that they've moved, we follow them. I talked about this yesterday. I did a webinar yesterday. I talked about this at the Vegas Expo. Let me put our video back up as I could wrap up here. Not our Expo, our Unleashed event is basically you have the ocean. The ocean's tide is coming in. The waves could be going out, and the ripples within the waves could be going in. Okay? So no matter what you do, if you take a bottle and you think because the waves are going out that bottle is going to go out to sea, when the ocean's tide is coming in, you're fooling yourself, right? When the ocean's tide is coming in, you could throw a bottle a mile out into the ocean and it'll make its way to shore. No matter if the waves are going out, okay? The same as an ocean where you have the people that they surf, right? They are looking at this perfectly. The tide is coming in and the big waves are coming in And there's smaller waves that come in, therefore they surf their way into shore safely. Can you imagine if the tide is going out and they're trying to surf in? It just doesn't work, right? You can't surf against the tide, against the wave. So same thing with trading. We see now that the tide has shifted. It went sideways, the tide has shifted and now is moving up. So even if the wave comes down a little bit, overall the tide is going up, in this case in the market. Therefore, you go with the tide. You don't go with the wave, you go with the tide, and then you match the wave with the tide. So if the trend is going out up, then you match the waves, any pullbacks to enter into that market. So there's a thing called the Dow Theory. If you give me a moment, I'll look here on another screen, because God forbid I put something on the screen you guys see. It'll be all over my Instagram. I'll have memes all over me. Mm-hmm. That's right. But I am the coolest CEO in the world. Don't ever forget that. Anyway, let me see here. Let me see if I can search. I'm on another screen. I have a bunch of screens. Okay. I don't understand why Yahoo can't do what Google does. Like, I don't understand. Why can't Yahoo do what Google does? Okay, here it is. Okay, we're gonna scroll back. All right, we're gonna scroll back right here, and you're gonna see. Right, I did. Actually, I did a couple things. This one right here. If you get a chance, look at this. Search this out. Pivot levels and the power of commonality. It was an article I've done many years ago, probably about 14 years ago, about using calculated pivots and the power of using them together in the higher time frames. So I would search that out. But also, if you search Christopher Terry, Dow Theory, right here, okay, I did an article, and this isn't the original article, you have to find it. And the ocean's tide and the market's trend, the Dow Theory still holds water. And I discuss in this article, which is about, gosh, this article must be 17 years old, right? It was like 17 years old, I did, 16, 17 years old. I did this article many years ago, back in 1996, 97. I had somebody who was a big trader living. Oops, hold on, let me get me off the screen. There it goes. That was that other article I was telling you about. This right here. Sorry, you couldn't see that. Pivot levels and the power of commonality. If you just search Dow Theory, Christopher Terry, you can find it. That right there. Let me see if I can find it better. Hang on a second. I'm not going to be happy until I find this. I'll find this, I'll show you, and then we'll call it a day. How about that? I don't understand why Yahoo can't, like, get up to date. Yahoo today is where Google was, right? Like 10 years ago. Let me see here. Hold on a second, guys. Let me just do a search. Dow Theory. Let me see here. Okay. All right. Can't quite find it right now, but Anyway, search Christopher Terry Dow Theory, and you'll see I wrote an article, and somebody took the article and reformatted it into whatever. And that'll give you a peek into the Dow Theory. If you want to read about the Dow Theory, I do suggest it. And that gives you the analysis or the thinking behind, let me pull this over. And the Dow Theory will give you the thinking behind trends, okay, of where the market trends were actually found. The Dow Theory shows you also stuff here. I would look into it, okay? And from here, this is where you have the waves, and then Elliott, which is Elliott wave, came in and put structure around it. They put the numbers around it, the Fibonacci around it. So if you look at Dow Theory and Elliott wave together, you'll see that they work together, and it can help you understand trend. And that's why at the end of the day, we're looking at, okay, here, we're looking at the market that is now broke out, bigger money has stepped in, and shorter term consolidation here. I would be on the buy side of the Bitcoin market looking for higher prices. And at least by reading the Dow Theory, by looking at Elliott wave, investigating that, you get to understand the power of working with the larger time frame, the tide, as you would, as if it was an ocean. Where's my beautiful face? There we are. Anyway, guys and girls, we're right here at the top of the hour, and I just want to thank everybody for coming on. I'm going to do a little bit of stretches. The other day, I had hurt myself a little bit, and my mobility was a little bit encumbered, but I've been stretching out, feeling great. And just this week, just get out there, enjoy, have fun with the markets. The markets are hard. They're hard for everybody. So if you find yourself saying the markets are hard today, well, let me just tell you a little tip. Step to the higher time frame, because if the markets are choppy, that means you're not looking at the higher time frame. So keep stepping up the higher time frames, and you'll find the market on the higher time frame is giving you patterns that you couldn't see on the lower time frames. Other than that, rock and roll. Have a great week, and I'll see you next Sunday morning as we do our market mastery. And spread the word. This is going to be the best classes ever. Next weekend, I'm going to do a class. I'm going to teach you something really special. I'm going to do a little bit of live chart analysis. Then we get into class.